channel is called the Flow of Money Institute. What I'm about to present to you does not constitute financial advice. I'm merely presenting information in accordance with our mission at the Flow of Money Institute. It's to educate people about money. If you're making any financial decisions, you need to consult with a financial advisor. Look for somebody that's qualified, experienced, and understands the financial situation that you are experiencing in your particular country. Today, I'm going to do a comparison between endowment insurance and bank fixed deposits. We're going to look at the pros and cons of investing in an insurance endowment and pros and cons of as opposed to investing in a bank fixed deposit. I've got some notes here that I'm going to go through. So if you would like to make some notes yourself, you're welcome to do that. But all the information is available on the internet. And if you click on the description box below, you will find resources that will help you further investigate and further just help you with your research when you are making a decision whether to go with a endowment insurance policy or with a bank fixed deposit. Now, endowment insurance is a savings product that has a small life insurance component. Each month you pay your premiums or your savings contributions, which are calculated based on the amount you want to get back at the end of the plan's term. Endowment plans operate as forced savings because you have to pay your premiums or your policy will lapse. However, not all your premiums will go towards the savings component of your plan. Part of the premium will be used to pay for the life insurance component. Not all endowment policies have a life insurance component, but most of them do. There are many different types of endowment plans, which gives you the freedom to find a plan that tailors to your specific financial goals. And your premium, as we mentioned, is paid monthly. Some plans also give you the option to pay with one single premium. We call this a lump sum payment or a lump sum investment in your plan. The most common endowment plan you'll find is recurring payment plan, that is monthly payments that provide a lump sum payment when your policy matures. The three other main categories of endowment plans are, number one, you've got retirement savings plans. In retirement savings plans, you'll set aside money until you reach your retirement age. After that, the plan will pay out a monthly sum from your account. Retirement savings plans are aimed at providing an income after your age of retirement. So if you intend to retire at the age of 55, you will receive a monthly payout that would work as your monthly income. Generally, you have the option of choosing your retirement age, how long you want to receive payments, and the monthly sum that you want to receive on your retirement. The second endowment savings plan is called an education savings plan. These plans are created to fund your child's university or tertiary education. But a common misconception is that these types of endowment plans are only supposed to be used for education. That is not so. It's actually a savings plan where you will still be in charge of the money. So for example, if your child decides not to go to university but would rather start his own business, that money can be used as capital to start that business. So it's not strictly an education, it's a savings vehicle for your child. Generally, you can insure your life so that the investment continues and your child is guaranteed that the education will be paid for. Many insurance companies out there provide an insurance element to this plan. For example, there is a protector element where if something happens to you, then the premiums for the plan will continue to be paid, and that will guarantee that your child will receive the lump sum that was intended for their education. So there's various things that can be added to these education savings plans to make it so that your child definitely receives the money. For example, a life component, if you were to pass on, there's also insurance companies that provide a guarantee that the premiums will continue to be paid if you take out that life component. So when you are choosing an education savings plan, be sure to speak to your advisor and find out all the details that are relevant to the savings plan, and whether to make sure that it would give you the benefits that you are actually seeking for your child. The third endowment plan that you could engage in and use is called a goal savings plan. This is a forced savings plan to finance a particular goal. For example, saving to accumulate the deposit for a new home or saving for a holiday. These are good vehicles for your medium to long-term goals. For example, if you want to purchase a home and you are unable to put up the deposit that is required, you could plan an endowment savings plan where you pay an amount into that plan for about 5 years, and on the 5th year, you could receive the lump sum amount which you could use for the deposit of your new home. So it's a goal savings plan. Same with holidays. If you're planning to take a holiday, you could do the same thing. Okay, so what's a fixed deposit account? A fixed deposit account is an investment using your bank. Okay, it is a low risk, semi-flexible account that can be used to grow your savings. Similar to endowment plans, you deposit funds to the bank for a certain period of time, ranging from 3 months to 3 years or more. Okay, the minimum you could invest period you could invest, check with the banks that you are dealing with. The minimum period is a period of 3 months, and you could extend that into a period, a term that you decide. At the end of the time period, which we call the term, you will receive your agreed upon sum back along with the additional interest that has accrued in that account. However, unlike endowment plans, whose returns are sometimes dependent on the insurance fund's performance, the interest you earn in a fixed deposit is agreed upon at the beginning of the contracted period. As a general rule of thumb, the shorter the term and the lower the deposit amount, the smaller the interest rate is going to become. On the other hand, the longer the term and the larger your deposit amount, the greater the interest rate. The advantage of using an endowment insurance investment is that the company that would take your money to invest it is going to invest it in the fund that they use to build wealth. So for example, if you have the appetite for higher risk, your monies could be invested in a higher risk fund, which would give you a higher return. An endowment, as a fixed deposit fund, on the other hand, as I mentioned, the interest rate is decided at the beginning of the period in which the investment is made. So it could be fixed, whereas your markets could rise and give you a better return if you had invested in an endowment insurance investment. As far as investment options are concerned, fixed deposit accounts are some of the most accessible investments. opportunities that you could find. They are low risk and will be available to a wide range of consumers. Most times, people can start off their investments by keeping their money in the bank, but the bigger returns are gained from having your money invested in funds that invest in the stock market, in the exchange, for the financial exchange system. Okay, the types of fixed deposits are various, ranging from short-term fixed deposits to fixed deposits held in foreign currency. By identifying your financial goals, you can help make you can be helped to make the right financial decisions when it comes to choosing your fixed deposit term, as well as the amount that you're going to invest. Short-term fixed deposits are fixed deposit accounts that range between 3 to 6 months. However, in exchange for the faster accessibility to your funds, they provide a smaller interest rate, as we discussed. Long-term fixed deposits allow you to hold money for 2 to 3 or more years. If you're looking to save money for a longer period of time and to earn higher interest, long-term fixed deposits may be more suitable for you. Okay, so what would you choose? Should you choose a endowment insurance investment, or would you choose a fixed deposit? I would personally, for my investments, and like I said, I'm not giving financial advice here, please consult your financial advisor. But for my own purposes, I would rather choose an endowment plan. So the endowment plan for any particular savings goal that I have. Since some endowment plans are geared towards a certain milestone, there can be ways to get structured payouts for certain life events. Since you can choose your payout term and premiums, an endowment plan can be a useful savings tool if you are looking to save for events with known costs, like university, tuition, a wedding down payment, or for retirement. They can be particularly useful if you choose a retirement or education tuition endowment plan that will provide cash payouts when the time comes, when the money is needed. The major difference between an endowment savings plan and a bank deposit, fixed deposit savings plan is that at a bank, you are charged your marginal tax rate, and if you pass on the money to your beneficiaries, it falls within your estate and attracts estate duties, another form of taxes that you could be paying. Whereas with a life company, and that is endowment savings plans, an endowment is capped at 30% within the fund and pays out net of tax. Further, a beneficiary can be added so estate duty can be avoided. Also, after 3 years, an endowment with a life company is protected from all creditors should you be liquidated. As always, when choosing a financial product, you should carefully consider both your objectives and your risk tolerance, and remember to closely review the terms and conditions of the product you choose. So I hope the information that I provided can give you a starting point in choosing between an endowment insurance product as opposed to a fixed deposit product from a bank. Thank you for joining us on our channel. Please subscribe to our channel and click the like button if you'd like to receive reminders of further information that we will be providing in the form of these videos. Check the description box in the bottom. There will be many resources that you can use. So thank you for joining us.